Hello, it's me Adnan Rahman, and I hope you guys are doing well. I'm the market analyst for Errante, and in this video, I'll be explaining you the fundamental events for today, okay, especially the second release of GDP. And this video will be tilted or focused towards the fundamental aspects as well. Okay, so please stay tuned, and this video might be like 5 to 10 minutes longer. You can watch it on a 2x speed. Okay, so first of all, what we'll do is we will read this one, okay, the second estimate. Again, what this GDP means, what is the sequence of this GDP, that is what I'll be explaining you in the upcoming slides. For now, we need to study this one, what this GDP means, and then we will move towards this one. So I'll start with this one, okay? I'll start with the Federal Reserve speeches and what do we know in regards to them. So today we have a speech from, the Hammack and Harker and Buckland and Schmidj, okay? And this is what I'll be explaining you right now. Okay, when it comes to Hammack, he's a new guy in the market. Okay, and there are no new comments or new stances from his side, so there is no update on his part. Okay, there is nothing we know regarding him. And when we come to this guy, okay, what this guy advocates is like a balanced and cautious approach. When Federal Reserve or any other bank says us that we need a balanced approach, usually it means that they are data dependent. Okay, data dependent, this is what they mean. And data dependent means that they will make their changes in the policy according to the upcoming data releases. Okay, and this is also to be considered as a hawkish or a bullish signal for now for this Federal Reserve or the USD, because he in the insiders he focuses on one thing, that the inflation is moving towards the upside. Okay, and now when we move towards the Bakken and this guy over here, okay, they, what stance do they have? They have a hawkish stance over here. Let me get this into green. They have a hawkish stance over here, and they emphasize that the inflation concerns are a real thing right now. Okay, and they advocate for a tighter policy. So this is also moving towards the upside in terms of a rate hike, or at least rate hold stuff, not towards our rate cut stuff. Okay, so this is the thing I wanted to explain you, because this guy, okay, let me tell you again, this guy, no info from this guy, and over here he's also directly or indirectly focusing towards the upward inflation pressures. And these two guys over here, they are also focusing on the high inflation, due to which, to counter this high inflation, a tighter policy must be kept in mind. Okay, so this is in regards to the speech from Federal Reserve members that we already know. Now let's see how this comes out, or whatever they say. Okay, what is the outcome of this one? So now, what is the view of these people. So what happens if this guy comes out and say, okay man, I am dovish, okay, then that can bring a short term bearish movement in the USD. For example, he comes and say he's dovish, or even he can come and say I'm like hawk now. Okay, so that will implement or influence the US dollar. And same way over here, Harker or this Bakken from here, they change their stance, or there is a shift in the policy stance they are doing, then that can also affect the ongoing sentiments of the US dollar. Okay, besides this, okay, keep this in mind that trade war is the main concern right now the market is focusing on. Okay, now getting this out of the way, okay, I'll take you to this one second over here. Now let me take, we have done this one, this one is over, this one is over, this one is done, and this one is done. Now we will focus upon this part. Okay, to understand this part, let's first of all understand what is the GDP cycle we are really navigating on. Okay, for that I need to explain you, this is the GDP release sequence, and there are three type of GDPs over here. The first one is advanced one, the second one is preliminary, and the third one is final one. I know you guys might be thinking that this preliminary one should have been the first one, and the advanced one should have been the second one, and the final should have been the third one. But this is what they have set up. It's not something that I have done. Okay, so in the advanced one, this is the first release. Okay, this is the first release, and it has the most impact. Okay, it's known as the advanced category. And when it comes to preliminary, okay, this is the second one. Okay, that is what we are going to see today. And this is the second update. There are some updates over here into this one. Okay, and then we have this third one. Okay, what this third one, then this is the final one. It's the final release. Okay, and what this final release means that we have the most refined or calculated data out of this one and into this one over here. Okay, so keep this in mind. I hope you understand now. So in other words, this is the most important one, and this is a normal one, and this one also carries a little weight. Okay, so now as we have done with this one, now let's see what GDP is saying us. Okay, we know what this one is. This is the second release. Okay, it is the second one. Okay, now you just roll back your memory and you can understand what I'm telling. This is the second one, and what information do we know? Okay, the GDP growth at 2.3%. This is what we know, and if you look at the growth rate or the GDP of other economies, you will see that other economies are barely not even above 1%. Okay, and USD stands at 2.3%. Okay, so keep this in mind. Okay, this is clearly a lead that USD is taking. Okay, on the other hand, there was a solid private consumption seen in this a consumption sector or consumption component. Okay, and this is also something that will solidify the inflation picture, and because of this one, it will be a little bit troublesome for the Federal Reserve to go into a cut scenario. Okay, especially a cut scenario, they can go into hold one, and hike one is like a very a different chapter obviously, but cut is not on the scene, and a hold can be seen because of this solid consumption. Okay, because this will add up into inflation picture. Okay, keep this in mind. Okay, now besides this, there is something I need to show you, that why did we get that GDP at 2.3%. Now let me show you what is the overall scenario of the dollar, of this USD. Okay, so what I've named is that as the interest rate decision by Federal Reserve. You can understand this as a fundamental picture as well. Anyways, it's totally up to you. So what do we know over here? Okay, in terms of growth, all we see is the growth stand at 2.3%. And as I told earlier, that the spending is an issue, or you can see it's the main driver for this one. Okay, growth is again to the plus point, and now let's see that we have these 5 points. Okay, 1, 2, 3, 4, 5, and 6. Sorry, 6. We have 6 points. Now let's count them or characterize them. The first one is a plus one. Okay, now let's see towards the inflation picture. Inflation picture is kind of a steady over here. Okay, it's on 2.8%. 2 to 3% is the target of Federal Reserve, and it's right now it's on 2.8%. That means it's hovering around the upper limits. Okay, so this is what they don't want. They want to see a clear trend towards the downward movement, and then they will say, okay, that we have won the inflation war. So right now this is also something pointing towards another plus. Okay, for the USD. And then when it comes to the labor market, it's a healthy labor market because the unemployment rate, it stands at 4%. Okay, now why is this 4% a healthy one? Okay, because if you see the recession, in the time of recession, okay, this unemployment rate was like in 5 to 6 threshold. Okay, it was in 5 to 6 threshold. So once we have this again, then we can assume that it's in a negative territory and into the recession zone. So right now it's on 4, it's in a good place. So this one is also a positive one. And now when it comes to Jerome Powell, what he said, he emphasizes that it's too premature to go for a rate cut considerations. Okay, now this itself means that he's not wanting to even talk about this rate cut scenario right now. Okay, so this also comes another positive point for the USD. And then when it comes to the FOMC minutes, recent FOMC minutes reveal concerns about the trade disputes could elevate inflation. Okay, see, now trade war is the main issue for right now. Okay, and now even we have this, even though if we go for a trade war stuff, okay, and the inflation story might boost to the upside, and this upward inflation pressure will add up into this story over here, and then obviously we will get something that is above 3%. And when it's above 3%, then the cut or hold of the interest rate scenario will come to an end. Okay, this will come to an end. So this is something that is having some inflationary pressures over here. And now when it comes to Federal Reserve, it's maintaining its rates on 4.25 and 4.50%. So overall, in this 6 point, all of the 6 points are pointing towards a strength in the USD. Okay, that's also one of the reasons that we can see this downfall in the dollar, because USD has some room to go bull side. Okay, because right now it can go towards like in the past it has gone to zero point 0.06 or 106, or like maybe it can go above like 110. Okay, but gold is already hovering around 3,000. Okay, so it's on a very good psychological level. That's why it's very important to go through this psychological level and have some test and then move towards the upside. So what's happening until then, the investors are moving towards this gold scenario, because all of this, in the dollar scenario, because all of these things are going into a positive tune for the dollar. Okay, and now I hope I have explained this very well. So now let me explain you one thing before I end the video. Okay, one second. Over here, okay, this GDP, it's scheduled for today. And now let me explain you what do we know. Okay, the forecast. Okay, the forecast, I'll write F. The forecast is like on 2.3%. Okay, and the previous, for previous, I'll use P. Okay, this is obviously on the 2.3% as well. Okay, you need to have these values, okay, when you look for the news. And now when it comes to what shall be the higher zone, okay, what shall be the higher zone? High, like, see, okay, when if we have something the high zone is like on 2.8%. Okay, like, see, if we have this GDP growth near or around 2.8% or even above 2.8%, that can be a very, very positive, I mean, what have I drawn over here? I mean, positive, okay, positive scenario for the USD, okay, because it's a very huge deviated value or a deviated print. On the other hand, okay, if we have this print around the lows of like 2%, okay, or even lower than 2%, this is a huge deviation in the print. This might be a huge deviation in the print, and then this can have a temporary, okay, a short term downside in the USD. So keep this in mind while going for a trade opportunity over here. Okay, and with all of this said, keep the trade war in your mind. Okay, if the trade war is postponed again for a few months or a few days even, then that can bring a weakness in the dollar. And if the trade war is, or the tariffs are like implemented at the same time, then this can bring a positive movement in the USD. Okay, so this is the macro picture I have explained you. I hope you have understood. And now I'll be having an Urdu version for this one for those who cannot understand English well. Okay, have a good day, guys. Thank you. So kind of you.